Part 3 on classic type of investment. If you haven't watched part 1 and part 2, please scroll down. I've talked about investment that builds stability. Now today let's talk about alternative investment, and this is an investment most people don't think about. Types of alternative investments are gold, crypto, or even private equity. The risk is high, but they can add diversification to your portfolio. Let's talk about gold. It could be physical gold, silver, or security tied to precious metal like ETF or mining stocks. Investors buy gold to hedge against inflation and currency devaluation. Gold is a good store of value during economic uncertainty. Most people call it safe haven assets. The risks are high, price can be volatile in a short term. It doesn't generate income like rent, dividends, or interest. Returns depend solely on price appreciation. So how do you invest in gold? You can either buy a physical gold bars, or you can invest in a gold ETF or own a share in a mining company. Stay close to this page. I'll be sharing different types of gold ETF that you can invest in. The second alternative investment is private equity. What is private equity? This is investing directly into a private company. The company is not listed on the stock exchange, so through PE fund you can pool investors' money. The risks are high, but there are potential high return. With private equity, you buy, you restructure, and you can sell companies at a profit. It provides portfolio diversification since the returns are not tied to the daily stock market volatility and all that. It has high minimum investment requirements. We're talking of millions if you want to go into private equity. With private equity fund, you can invest in startup business, restructure it, and then sell it later for a profit. The third alternative investment is crypto, so like Bitcoin. High risk, high reward, very volatile. Together with this alternative investment, you can diversify your portfolio because they behave differently from traditional stocks and bonds. The key here is do not put all your eggs in one basket. Know your risk tolerance. If you're not a high risk taker, there are other options for you. I've shared that in my previous video. That is it from me, guys. Until next time, please stay safe and invest smart.